IMF, or the International Monetary Fund, is the latest agency to warn that the world will be in trouble economically next year. In its World Economic Outlook, the International Monetary Fund has made a grim prediction that inflation will double and growth will halve. Meanwhile, India's growth prediction has also been cut by a little more than 0.5%. But at 6.8%, India will still be the fastest growing nation in the world. At 6.1%, next year, we'll still be the fastest growing nation in the world. But what does that really mean? What's the impact of a global recession going to be on us? And can we survive it? First, let's begin with some key highlights of what the IMF has actually said in its outlook. And these are some of the big quotes. They have said that the worst is yet to come. 2023 will feel like a recession. This is, of course, on the back of a number of, situations that have been created: the Ukraine-Russia war, an energy crisis, decades-high inflation in large parts of the world, and demand slowing down in China. They've said winter 2023 will likely be worse. We'll see the weakest growth profile since 2001. Global inflation will peak at 9.5% this year. 1/3 of the economy may shrink this year or the next, and the economies of US, China and European Union will continue to stall. They're also saying that the energy crisis, especially in Europe, is not a transitory shock. So what does this mean for the world? Well, the whole world's growth is expected to go from 6% in 2021 to 3.2% in 2022 and 2.7% in 2023. So essentially, it'll be half in less than 2 years. Meanwhile, inflation, on the other hand, will jump up. So inflation is likely to go from 4.7% in 2021 to nearly double at 8.8% in 2022 for this year, which will ease to 6.5% in 2023 and then 4.1% in 2024. So how are the major economies of the world going to grow in 2023? And here is where it's important to see the relative growth. The United States, the largest economy in the world, will grow at 1%. India at 6.1%. These are the figures for 2023 that I'm giving you. China at 4.4%, so we outpace China as well. Russia will shrink, minus 2.3%. Canada at 1.5%. UK stagnant at 0.3%. Germany at minus 0.3%. France, Italy, Spain, all either less than 1% or thereabouts. Most of the world actually is not going to do very well. Saudi Arabia, with all of its richness of crude oil, will grow at 3.7%. So why is India expected to do better? And what do these relative numbers mean? What does it mean, 6.1% versus, say, 1% of the US? Is India going to survive a very tough period going ahead? And what can we see as an impact on you and me? After all, you're probably asking yourself why you should care about the story. But let me tell you, it's very, very important for you to care. But before we move ahead, let's listen in to what the IMF has said today.
Our global growth forecast for this year is unchanged at 3.2%, while our projection for 2023 is lowered to 2.7%, 0.2 percentage points lower than the July forecast. The 2023 slowdown will be broad-based, with countries accounting for 1/3 of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession.
And to speak more on this, I'm joined this evening by Dr. Santosh Mehrotra, senior economist, Subhash Chandra Garg, former Finance Secretary of India, Ajith Pai, economic strategist, and Monica Hallan, author and adjunct professor at NISM. Welcome to all of you, and thank you so much for speaking with us today. Well, we've chosen this as our big story this evening because we truly need to understand what this outlook means for India and for the world. Monica, let me begin with you. First, about how grim this picture is looking like. And is this dependent largely on this war between Ukraine and Russia probably continuing, the fact that it has not wrapped up yet, and it has caused a spiral of issues like high inflation and low growth across many parts of the world?
Yes, IMF today has given the forecast. It's a grim forecast. But I don't know where the surprise is because I think a lot of people saw this coming. I think it's a little Pollyannish, it's a sort of a childlike belief that in 2008, they believed, the US believed that they had taken risk and completely done away with all the problems that come with risk. In 2021, they thought they have done the same thing with inflation. The inflation numbers had begun to rise last year, 2021. But what did the US Fed do? They just went on printing. I don't know how many trillions of dollars they have pumped into the system. So this is a train wreck, which a lot of us saw, like as the train was going wild. So I'm not sure why there is this sort of disbelief at the IMF projections. This was going to happen. It is a grim story. It is complicated by global events which seem not to go away. COVID, Ukraine, Russia, that seems not to be going away. We don't know which direction China is going to go. So at a global level, things are very messy. But that one ray of hope, Tamanna, seems to be India. And we can talk about what it means for us here in India.
Yeah.
But I don't think many of us are surprised at what we are seeing in the global numbers.
So, the question of relatively what it means for us here in India, and Professor Mehrotra is also joining us this evening on the show. So when we say that the US will grow at 1%, China will grow at about 4%, and India will grow at 6.1%, on the face of it, it seems like great news that we're going to be doing much, much better. But is it important to look at it in the context of what is the size of the Indian economy relatively in the first place? And the kind of hit that we took during COVID-19, because you had a dip during COVID-19 and then a recovery. So is it that base effect that we need to take into consideration?
Indeed, we have to take into account that base effect, but I think we have to take into account some other dimensions as well. I've always wondered why there is such a sense of glee among people about us being the fastest growing large economy in the world. The fact of the matter is we have been the fastest growing large economy in the world for pretty much 15 years. We were the second fastest till some years ago. We became the fastest because China's growth rate fell. And why are the richer countries, which are much, much richer than us, I mean, just for example, the country that we've just exceeded in total GDP, the UK, has a per capita GDP nearly 20 times ours. Ours is at $2,200 per person at market exchange rates, and the UK is about $40,000. So there is no expectation that rich countries should be growing. The planet will not bear, they're growing at anywhere close to 4 or 5%. While for us, we have no choice but to grow at this kind of pace, because anything less than 7% means that there is not a hope that we will be able to reduce poverty. So we have a very low level, and therefore we are bound to grow fast because we have underutilized resources. Secondly, you rightly pointed out that our dips in FY21, meaning the first year of COVID, was 6.6%. The world economy contracted by only 3.1%. And when in FY22, we grew relatively fast, again, patted ourselves on the back that we were the fastest growing economy in the world, we had rebounded from a very low base. And our per capita income was still just around the 1920 level, and per capita consumption, final consumption expenditure was actually 5% less in FY22 than it was in 19. So this is the context. Now, let me come to the impact on India of the global recession, which is sort of impending. First, I would very briefly make 4 points very quickly. First, the stagflation that the US and Europe are seeing has led to rising rates. US Fed has raised rates, which has led us to protect our own currency, and has the RBI has raised rates. Now, look at the juncture at which this is happening, that rates are being raised and raised very rapidly within India. Capacity utilization in India had just about reached 73-74%. And that's when there was possibility that private investment might begin to rise.
But Professor Mehrotra, was there any option but to raise rates? The world is raising rates. Everyone is raising rates. Could India have done anything differently? The RBI's mandate is to keep inflation between 2 and 6%.
That may well be the case, Tamanna, but we know perfectly well that RBI has precious little control on inflation beyond core inflation. And core inflation accounts for only 45% of the products in the consumer price index basket.
Okay.
It has precious little control on fuel, which is an imported inflation, and nor does it have any control on food prices, which accounts for about 45 to 50%. So, yes, core inflation needs to be correct. But anyway, there are three other dimensions which
we'll come back to it. We'll come back to it because we'll keep it moving, sir. Ajith Pai, I want you to come down to this because, at the end of the day, we've painted the global picture. We're in for tough times. We've told our viewers why. India, should we be celebrating that 6.1%? Are we the bright spot in this dark firmament? And can that sustain? Because if our biggest bet, and we'll just play out the reasons why India is going to be doing relatively better. And one of the biggest reasons is that we have a lot of domestic consumption. We consume a lot domestically what we produce. We have a large base of consumers, so our population helps there. But can that sustain as inflation keeps going up? Will people be able to spend as much?
So thank you for that question, Tamanna. And I think while I share your optimism on India's growth, I don't think the 6.1% is something to celebrate, but it's always good to be growing faster than the rest of the world. But I think that the Indian economy actually could be growing sustainably faster than the rest of the world for one very important reason, which is the big elephant in the room that no one has talked about so far is what global debt is as a percentage of GDP. So when you have a look today, especially after the pandemic, global debt to GDP has sort of exceeded 350%. In an environment where it's reached unprecedented levels and the central banks of the largest economies are raising rates, that sort of doesn't bode very well for growth prospects for the globe at large. However, when you look at India and you look at the total debt in India, we are looking at something that's less than half the world, average, less than, half of what the world overall is. And the biggest part of that, which I think is going to be supporting growth going forward in India and buck the trend, is actually that private credit to GDP in India is fairly low. So I think we have cleaned up the overall financial system. Credit is reaccelerating right now after a very long period of time. There's been massive formalization of the economy in the past 6 to 8 years. And so I think that is going to be the single sort of largest sort of what I would call tailwind for India relative to the rest of the world that is mired in a lot of debt and some of the other emerging countries that are struggling with very, very high interest rates, because of, how the economies are rated by the sovereigns. The second factor, when you have a look at the Indian economy relative to the others, is that we're actually attaining economies of scale across multiple industries as it happens right now. And a lot of our spending in the past few years and focus in the last few years has been on infrastructure. Infrastructure, as all of us are aware, actually has 5 to 6 times the employment elasticity of, regular sort of the average of the overall economy. So I think these two, sort of big sort of factors are likely to insulate the Indian economy slightly from these global factors.
I want to bring it down to, the thing is, when we speak about economy, and with all due respect to the very learned people on this panel, when we speak about economy, we speak about it in very abstract terms. Like, the economy is an abstract being that will grow or not grow fast enough. What does it mean for people if India grows at 6.1%? and the world faces a recession. Let me just bring in Mr. S.C. Garg on that point, because that truly is the question, right? That are we able to shield our countrymen and women from a global recession? And what does that mean for us?
So thanks. The IMF has titled this report as the sort of crisis of living kind of thing, because there is very much expected increase in the inflation, doubling of inflation, as you said, and 1/3 of the world getting into recession. These are not abstract things. These are actually affect people. So if you are in recession or you're not growing very well, that country's people would have much less incomes to spend on consumption. Their consumptions will get affected. Similarly, if their inflation is very high, their real incomes will get further down, and they would be worse off than they were earlier. And therefore, growing at a high rate, particularly for a low-income country like India, is very important. I don't think we should draw very much of a satisfaction or pleasure that somebody else with $40,000 income or $80,000 income to spend per capita is growing at 1%, and we at 2,000 are growing at 6%. I think 6% is only slightly less worse poor than we are. So I don't think we should be very, very happy. We have a lot to catch up. China has caught up to about $12,000 to $13,000 per capita now. We were almost at the same level in 1978-80. We are still not there. And the way the inflation is working, we are also facing very high degree of inflation in the country. And that inflation is taking away, in a way, the 6% growth by that K-shaped kind of thing is going more towards the richer side of people than lower income people. So in fact, even if India grows at 6 or 6.5% or 7%, the poorer are actually not growing that much. And this is reflected in the consumption, overall consumption being down, and even the poorer people suffering a large amount of job loss. Their consumption, their confidence is still much less. The employment is much less. So I think overall, if you look at these numbers, we, instead of celebrating, as I said earlier also, we should be really focusing our minds to decide and design ways in which we can grow at much higher rates, about 8 to 10%, for a very long period, not 1 year or 2 years, but for 30, 35 years. Then only we can hope for India and Indian people to be actually feeling very good.
Okay, Monica, I just want you to come in on that, because you started by saying India is the bright spot in the world. And is this just simply a case of seeing the glass half full or half empty, or looking very critically at the kind of growth that India has been witnessing over the last few years? And that has been a persisting concern. This K-shaped recovery that Mr. Garg is talking about. Rich are getting richer and the poor are getting poorer.
Tamanna, I'm not sure if it's showing up on the Gini coefficient, which measures inequality. And if you look at, I've looked at 3 different papers, one IMF, one World Bank, one NBER, which is saying that absolute poverty in India as measured by the World Bank is down to almost 0. So when you are a very poor country with a large proportion of population living on less than $2 a day, you don't get to a middle-income country overnight. So you will have to see absolute poverty going down to 0 before in the next 25 to 35 years you become a middle-income country. So I think that is the process which is going on. And of course, we are at $2,000 per capita. And when we compare it to the developed world, yes, the levels of income are very absurdly low. But to your point that should we celebrate? I think, we've just been through very tough times of COVID. It's been brutal. And if there is a narrative of being happy or about India being an outlier, I don't see why we should not celebrate. Because remember, as Professor Schiller has said, it is about the narratives that we tell ourselves, the stories that we tell ourselves, which become self-fulfilling prophecies. So one is that, do we have the groundwork in place? If I look at the GST, if I look at IBC, if I look at the Jandhan, the UPI, the account aggregator systems coming in, the Inspector Raj is now under attack with a bill in Parliament in the winter session. So if you're looking at systematic reform to clean up, to increase efficiency, to do second generation reform, I think a lot of work has happened. I don't see why we cannot celebrate at a time when the rest of the world is in distress. So I'm not saying don't feel sorry for them, but if the country is doing better, I think it's cause for celebration.
Mr. Garg, would you like to respond to that?
I think it's fundamental right for everyone to feel happy and to celebrate. And if there is a reason for doing that, that's still much better. But celebrating without actually there being good reason for that perhaps may not be as good and lasting. You just look at this. For 5 years, now for the current 5 years, beginning 1920, we have for the last 3 years have grown only at the rate of 1.7%. This year, if we are growing at about 6.8 or 7%, and next year we will grow at 6%. In 5 years, we will be growing nationally also only at about 3.5%. Is that a reason for us to be celebrating? Is there justification for that? Or is there a good reason for us to think why exactly we are not growing at a long-term average of about 7 to 8%? I don't think we have done real big reforms in the country in last 4 or 5 years. In fact, whatever real reforms we started, we have abandoned, whether it's marketing reforms in agriculture or privatization of the public sector in banking. You name any real reform which will change the trajectory of growth for a long time to come. These UPIs and the payments, etc., these don't add up to the GDP. It's right to have very facilitative payments. Cash was the payment medium, and UPI is an equally efficient.
No. So essentially, you're saying people have to be able to spend more, whether it's via UPI or cash.
Exactly.
Is not going to make a difference. Okay, Professor Mehrotra wants to quickly come in, and then I will get your responses, Monica. Yes.
Tamanna, it's not entirely clear to me what there is to celebrate when the official World Bank report just a week ago has told us that in 2020, 70 million people in the world fell into poverty, and 56 million of those, that means 80% of those, were from India. As it is, India contributes the largest number of poor in the world. And this 56 million, by the way, I should tell you, is pretty close to the estimate that I had come up with for 2020 of the people who fell into poverty in that year. Secondly, it's not entirely clear to me what there is to celebrate about the fact that while there were 10 million unemployed in 2012, by 2019, there were 30 million unemployed, and that number has grown by 7 or 8 million over the 2 years of COVID. Thirdly, what is there to celebrate about the fact that while the share of those in agriculture was systematically falling, the absolute number of workers in agriculture was absolutely falling till 2019. Between 19 and 20, we added 44 million people to agriculture. 44 million. That's well above what the government says went back to agriculture. That means that we are actually reversing the process of structural change, of structural transformation. We are adding people to agriculture. 44 million is a catastrophically large number. And then in 2021, we added another 8 million to agriculture. That means that if there were already far too many people in agriculture. Okay. Now we've added another 52 million. That means real wages are falling. And of course they are. That's exactly what the periodic labor force survey is saying. So, I mean, it's not entirely clear to me when the GDP data is telling us that private final consumption expenditure is still 5 percentage points below per person than two years ago. And this is supported by the facts I've just given you. That joblessness has increased, employment rate is falling.
Monica, please respond. What is there to celebrate?
Right. So, Tamanna, the way that I will look at this is that when you are taking a trajectory which is going back more than 2 years, we are ignoring a global event like COVID, which has derailed every nation. And it is the response of a country to COVID which is defining what is happening now, 2 years after the event. So we are still going through COVID, but what is it that most of the developed countries did? They printed their way out. They increased revenue expenditure. They gave money to people to spend. It's caused asset bubbles. It's caused this whole crypto bubble across the world. What India did during COVID, I thought, was very good policy making, because we capped revenue expenditure to try and get food to people and vaccines to people. The capex spends went up by, I think, 35% in budget 2022. And 1 rupee of capital spend has a multiplier, which is twice and then 4 times down the road as compared to the revenue expenditure. So I'm saying that we are getting out of a bad situation. The next 18 to 24 months will tell whether today we should have celebrated or not. But looking at the Indian policy response during COVID, I think it may be premature if you're looking back, but if you're looking ahead, I think we shall do fairly well. We should get out of this, because a lot of work has happened over the past few years, which gives us the legs to walk forward, taking COVID as a global event and then moving on ahead with that, Tamanna.
So the global events have not ended at COVID. I'm going to get Mr. Ajith Pai into this conversation. We had COVID, the slowdown that came after it, then supply chain shocks because, people were running out of things to sell and global supply chains were blocked. Then you've had this Ukraine-Russia war. Now you have persistent inflation all over the world, and then central banks, adding to the shockwaves by increasing interest rates. Why do you think India is placed to do better? Or should we be looking at the fact that, as Professor Mehrotra and Mr. Garg are saying, at 6.1, it's just not enough for what we need. If we want to pull out a large number of people out of poverty, if we want to shield ourselves, 6.1 is not going to be enough.
You said that why I think India would do better, and I've already told you why the India growth rate will be faster. But to both Mr. Mehrotra's and Mr. Garg's point, the kind of growth that would be required for India to bring down unemployment would actually be significantly higher than what is forecast. And part of it is that India is today not a very productive economy relative to some of the other economies in the world. It's got a GDP that's about 1/5 that of the world average. A large part of that is driven by what I would call the number of the percentage of the workforce engaged in agriculture. It's around 40% in India. Best practices for a large economy is, less than 2% of a country can feed its entire population and have excess left for exports. So we do have a long way to go, and there is a lot of disguised or, unemployment or underemployment in India that is still in agriculture that hides, what is reflected in the rest of the economy. So what we really require to bring down that unemployment rate are growth rates closer to 9 to 10%, because they're climbing up that productivity curve. If we produce more per person, then you need fewer people. So the threshold that India has for growth is a significantly higher threshold to ensure that the wages start rising, that the people start feeling at the base that things are improving at a very rapid pace. So I think it's both things. I think India is poised to actually do better in terms of growth rates than the rest of the world. But if we actually want to make the person on the ground feel that and sense more of that improvement, we'll have to grow a lot faster than that 6%.
I think we're also
IMF.
Positioning the debate a little incorrectly. We've already jumped to the very, I would say, tall task of pulling out a large number of people from poverty. Right now, when the world is facing a recession, the question should be, can you protect people from facing the heat of recession and whatever that may bring? Let me come to you on that, Professor Mehrotra. How do we do that? How do we protect people, especially at the economically weaker end, from what a global recession could bring?
Well, we would start by actually recognizing that we have an employment problem. I don't think there is any sense of recognition from the government that we even have an employment problem, despite the fact that even before COVID, I want to remind our viewers, before COVID, we had the 48-year high in open unemployment. And that has only worsened since then. As a result of that, real wages have been falling. And this is the reason that people are falling into poverty, increasing numbers. Now, what do we need to do? Well, let's focus a little bit more on providing quality health services to our people. In other words, we have to increase our expenditure on health from 1.3% of GDP, which has not risen over COVID, despite a global international pandemic that our country was facing. You would have expected that at least in a pandemic, the public expenditure to GDP ratio on health would have gone up from 1.3%. It has not. You look at 3 years budget, 86,000 crores central government, 86,000 crores, 86,000 crores in FY21, 22 and FY23 projected. This is not the way forward to reduce out-of-pocket costs of people. And Ayushman Bharat is not doing very well. Secondly, our children have lost 2 years of schooling. That means that children who were 6 years old and would have come into school at 6, they've not been in school. And those who were in school, they've lost 2 years of schooling. That means lifetime earnings of these children are gone forever, which means that we have to do, the whole country has to do what Tamil Nadu is doing, bringing volunteers to teach these children,
right,
and that these children are learning better.
So focus on healthcare, focus on education, and I think that's how we should look at this problem. How do we protect ourselves from a global recession? Healthcare, education should be the pivot, says Professor Mehrotra. Subhash Garg, what's your view?
See, we should look at who are going to be very badly affected by the global recession. So I think we lose on the exports front. So those industries, especially these SMEs, etc., which are thriving on the export of the goods, especially, and also now services, will be quite worse affected. As agriculture, we have in any case stopped exporting. So I think in times to come, it's going to adversely affect the farming community again. And the services which were our best hope and which were doing well, if they get also adversely affected in the IT and other industries, then we may have some serious problem on our hand. Now, how do you deal with them and their problems in times to come? very obvious kind of normal answer is that the government should be able to support them in those difficult times. But government is already very very deep into the debt and the fiscal deficits. Our fiscal deficits of the central government alone are twice the normally acceptable and sustainable kind of fiscal deficits.
Right.
We are sustaining over 6% for 2 years now, and there is no hope, there is no likelihood that even for current maintenance, we will be able to have less than 6% of the fiscal deficit. And therefore, without spending much, as Monica was saying on the last time, when the crisis hit us from the COVID side, we did not extend much help to those who were very badly affected by the COVID. We may not be from the government side. I don't share this view that the government would be able to and should be able to do it. I think it's the people, it's the economy, it's the private sector, it's all of us put together. We will need to sort of work harder to make sure that we earn more and we become competitive to export.
You have to work harder to earn more. The opportunity needs to be there. And that's the fears of a recession, that those opportunities will dry up. Monica, your take on what we can do to cushion ourselves. Is it going to be enough to sort of celebrate the 6.1% figure? We need to ensure that we keep our head above water.
Right. Look, these are global crises. One after the other is hitting, and we are all battered. And yes, you can blame governments, we can blame everyone else. But when there is a fire raging, you are going to get singed. You are going to get affected. It is just that how badly are you going to suffer? So in that context, I think, the way that we will suffer is because in a recession in the West, our exports will suffer. I think 20% of GDP is exports. That is going to be a problem. So if domestic consumption doesn't take up the slack, there is going to be a problem. And the second way that it affects us is when the foreign portfolio investors take their money out. And I just got some data which is saying that in this calendar year, they've taken 1.7 trillion rupees out net. But on the other side, we're also seeing, Tamanna, very strong domestic inflows coming into the markets. I think 1.4 trillion rupees is coming as systematic investment plans into equity from retail investors in India. We can say that this is the well-off, we can say this is middle class, but the average SIP size is about 1,500 rupees. This is not somebody who's very rich who's putting money into the market. So yes, there is a problem, but I think there is a response coming from within the country to get over that. And I want to say one thing on inflation. We are facing inflation, but look at the difference of the kind of inflation that the West has seen. They were at 1%, 0.5%, 1%, and they have gone to 6, 8, 10, 12, 14. We were in the range of 4, 4.5, and we're at about 7. And the RBI projection is bringing it down to 5 in FY24. So yes, there is inflation. Yes, there's going to be impact. But when there's a fire raging, you are going to get slightly burnt. And I don't see what is it that anybody will expect the government to do. You don't want higher fiscal deficits, but you want more spends. People don't want to pay taxes. When you start formalizing, there's a problem that GST is bad. So, something has to give. What is it that we want? If we don't pay taxes, where will the government get to spend on education and health? So it's a whole story of formalization. You start the formalization process, and the pushback is, what happens to the people who can't formalize? So the bleeding heart stories will start immediately. So I'm not sure what some of the erudite members of the economist community want, that you can't have a perfect solution. And should perfect be the enemy of good all the time in this country? Can we not do anything good because we want everything to be perfect? I can't understand that logic at all, Tamanna.
Well, I think that's a longer debate and a bigger debate, perhaps for another day. But I will wrap it here. And I want to thank all of you for joining us and giving us your time on what I think is a very crucial story to understand and actually go beyond the headline on. I'm going to take a very short break on the show. But when we come back, the legend has turned 80. From special shows in the movies to fans outside his home, there are so many celebrations going on. We bring you all of those details after this very short break.